Why do some traders succeed and others seem to consistently lose money? That's the question I'm going to be answering in this video by comparing the differences between profitable traders who perform well and traders who underperform. And by knowing what the successful traders do differently to the traders who are failing, you'll be able to compare your actions to those of a high performing trader and begin to improve where you are going wrong. So that's an important question. Why do some traders succeed and others seem to consistently lose? What is the difference between a high performing trader and a trader who is break even or can't manage to break through to consistency? So what is actually the core difference? And that is what I'm going to be answering in this video by comparing the two traders. So comparison one, a trader who performs well and is able to consistently pull money out of the markets, they know what their edge looks like, okay? And a trader who is consistently underperforming, they lack clarity behind their edge. So that's comparison number one. A high performing trader knows exactly what their system looks like. They know what trades they are looking to capitalize on, and they understand their edge, their process. They have clarity behind their strategy, which enables them to perform at their best because there's no guesswork. They know what they are implementing into the market. And a trader who is underperforming, so the difference here is a trader who is struggling, okay, they lack clarity behind their system. They don't actually know what trades they need to be taking. They haven't built their edge playbook. They couldn't tell you what their A+ setups look like. Their trading is all over the place. One day they're trading trend lines, the next day they're trading supply and demand, and their approach to the markets isn't consistent. And this is a very important comparison, because when you know and have developed your edge and you understand your system and you know what you're looking for, so you have clarity behind your strategy, it's going to enable you to perform at a higher level. It's going to help you to build consistently and consistently take money from the markets. Comparison number two, they have built the habit of journaling, okay? And a trader who is underperforming, they don't journal regularly at all. So the key difference here for comparison number two is a high performing trader, a trader who is able to consistently pull money out of the markets. They have built the habit of journaling. They are journaling either every day or at the end of every trading week. They are pinpointing where they are going wrong. They are also identifying what they are doing well. So as traders, to reach high performance, you don't just want to know the things that you aren't doing so well. You also want to be knowing what's working. You want to identify what is making you money and continue to act and repeat those actions which is working for you, which is making you money. So the key comparison here is that an underperforming trader, they are not journaling. They haven't built the habit of journaling. They couldn't tell you or show you a trade they took last week, and they're not physically journaling in a notebook with a pen and writing down key points that I've just gone through there. So things they aren't doing well, triggers in their trading that cause them to underperform. They have no understanding of how they're performing. There's no data, there's no tracking of these emotions, triggers, what they're doing well, what they aren't doing so well. And this is not going to help. And this is one of the reasons why traders are underperforming, is because they are not journaling. So the key comparison there is the key difference between a high performing trader who makes money and a trader who is still struggling to make money. Okay, the key difference there is the professional trader, the high performing trader, has built the habit of journaling correctly, and the trader who is underperforming, they're failing to journal. So going on to comparison number three here, a professional trader, they know their triggers. Okay, so a trader who is able to perform at a high level, they understand what causes them to underperform in the market. So this kind of links to comparison number two about journaling. A high performing trader who is consistently pulling money from the markets, they know the triggers, okay, the events that are going to cause them to underperform in the markets. They are very aware of situations, triggers, which is going to cause them to mess up and make mistakes and underperform, okay? A trader who is underperforming, who is failing to make money, they are unaware of their flaws, okay? If you do not know what is causing you to make mistakes, what is causing you to overtrade, what is causing you to chase the markets, to hesitate to take positions, to move your stop loss or close trades early, if you are unaware of the triggers that cause you to underperform and make these mistakes, you aren't going to be able to reach a high level of performance in the markets. And that is one of the key differences between a profitable trader and an unprofitable trader, is that the profitable high performing trader, they know their triggers, they know what's causing them to underperform, and then they work on that to find solutions and to minimize the underperformance. And a trader who is failing, they are unaware of their flaws. They do not know the triggers, the events that are causing them to make mistakes. So they are almost blind to their own actions in the market. Going on to comparison number 4 here. The professional trader who is able to perform at a high level, they don't attach their identity to their trades. And then on the other side here, a trader who is struggling, who is failing to make money and is underperforming, they take trade outcomes personally. So this is a very important comparison between profitable traders and unprofitable traders, because attaching your identity to the trade outcome is one of the root causes for underperformance, tilt, making mistakes, chasing the markets. Because if you take a loss and you're attaching your identity, your self-worth, how you feel to an outcome, to that loss, you can begin to understand how that's going to affect your decision making going forward. So the key difference in a high performing trader and a trader who is not performing very well is that the high performing trader, they do not attach their identity to trades. They are fully aware that the market operates in probabilities and an outcome of the trade does not reflect on them personally, okay? And then on the other side of that is the trader who is underperforming. As I've said, they do take trade outcomes personally, which affects their decision making. Comparison number 5 here. A high performing trader, okay, they understand the law of probabilities, as I just mentioned there. They understand that each trade that they take is a calculated risk, and there is a complete random outcome when they pull the trigger and place their position. They have managed their risk correctly, they have predefined their exits, and they understand that this trade is completely random and there is either a probability it's going to lose or it's going to win. Okay, they fully understand the law of probabilities. And so a trader who is underperforming, who is failing to pull money from the markets, who is struggling, they want to always be right. Okay, they put in a position because they have to be right. Okay, they see this setup unfolding and they take the trade because they are sure it's gonna win. Okay, an underperforming trader, they don't understand probabilities. They always want to try and be right and to make money from the markets, which is going to lead to underperformance, bad decision making, and also building bad habits, because they're going to only take trades which they think are 100% certain, which is going to skew their actual perception of the market, which again is going to directly impact their performance and, as I've said, their decision making in the market. So a high performing trader, they understand the law of probabilities, but a trader who is struggling to make money, they want to always be right. Okay, that's the key difference there, the comparison. Moving on to the last comparison here, comparison number 6. A professional trader, okay, who is performing at a high level and sustaining that high performance and pulling money out of the markets on a consistent basis, they accept that losses are normal, okay? High performing traders truly understand that losses are a business expense, okay? They know that they are going to incur losses over a large enough sample size or on a day-to-day basis. There is a probability, going back to comparison number 5 there is a probability that they are going to take losses. And high performing traders accept those losses. They understand truly that it is part of their job as a trader operating in the markets, which allows them to sort of brush them off and not, again, as I've said, detach their identity, their self-worth to that loss, because they know it's part of the game, it's part of the probabilities that they have accepted. And then on the other end of that, a trader who is underperforming, failing to make money, they can't handle losing trades. It goes back to attaching their self-worth and identity to these losses, okay? It doesn't make them feel good. They don't truly or haven't truly accepted that losses are part of the business. They want to always be right, as I've said there in comparison number 5, and they simply want to try and control the outcome of the market, because if they are taking a loss, it's a direct hit to their ego and their own identity and self-worth. So this is a very key point to understand, is that high-performing traders, they fully accept that losses are normal. They go into the trading day expecting to lose. It's part of their business. When you put on a trade, they understand it's a calculated risk and that they already have predefined their losses, meaning they have accepted that they can lose. But on the other end there, a trader who is struggling to pull money out of the markets and is failing, they can't handle losing trades. It simply causes them to go on tilt, and they try to avoid taking losses at all costs or at all possibilities. However, by doing so, by trying to avoid losses, you actually create more losses, because again, your perception of the market changes. You're not reading the data correctly. You're not reading the charts properly. And this actually creates more losses, which they are trying to lose. And of course, an underperforming trader can't handle the losses. And then it just creates a spiral of more losses and underperformance. So they are the 6 comparisons between high-performing traders and traders who are underperforming. That is all for this video. I hope I can help you out. If you do want to connect with me, check out the link in the description, and I'll see you in the next video.